The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning and welcome. It's another great day, to be here talking taxes. And, today we're talking about you missed the tax deadline, now what? To be honest with you, did no show prep. Just coming out here, we're just going to wing it today and answer any questions you have. But first and foremost, you missed the deadline. Now what? What are you going to do now? Well, if the IRS owes you a refund, just get your taxes filed. And, they're going to give you the refund and they're going to give you interest. Now, maybe you missed and you hadn't filed, not just 2024's tax return, 2023's tax return, maybe 2022's tax return. Well, if you get those filed and there's a refund, you're going to get that money. Unfortunately, go beyond that, and the IRS is now keeping your money. It was your money, but after 3 years, that money seems to evaporate and go away. Now, amazing, if you owe them money, they're still coming after their money or your money that you owe them. But if they owe you, they don't have to pay. See, it's not a two-way street. It's kind of one way. It's their way, and it's the only way. And that's, per Congress and everything, because, hey, they want you to file and they want you to file timely. And then, they've spent the money anyway. So, hey, you're not going to get it back. Now, that being said, you can get the refunds and everything, and they're going to pay the interest on those as well. Not as much as what you would probably make out right now investing elsewhere, but you're going to get that money back plus refund. A friend of mine, a client of ours, actually came over to us and started using us. Well, the prior firm that he was using didn't file his 23 tax return for both his personal and business. It didn't do anything for 2024. They billed him quite a bit, but didn't get anything done. We come to find out that he's got about $40,000 coming back, which is really nice. And so, unfortunately, that means the IRS has been sitting on that money and he hasn't had the money to invest or use personally because it's sitting there at the IRS. Well, that is not the way you want to go. So you never want to leave the IRS that kind of money sitting there, even for a year until you file. What you really want to do is make sure you're doing your tax planning so that when you file, and hopefully you file by April 15th or you file by October 15th, that maybe there's a little bit of money coming back to you. Or, if you're filing by April 15th, maybe you're paying in just a little bit of money. But you don't want to be in a situation where you've paid in, $10,000, $20,000, $30,000, way too much, or even underpaid by that, and then have the IRS just refund your money. Because if you file April 15th, they're just giving you the money that you have there. They're giving it back. No interest. They get to keep that. October, yeah, they're going to pay you maybe a little bit of interest, but they've earned a lot more than what you did because you've had a whole year that you've been putting this money there and you haven't earned anything for the money that's sitting there at the IRS. So, there's never a goal to overpay, at least not overpay by a lot of money, and it's never a goal to underpay by a lot of money. You want to make sure your estimates are right. You want to make sure you're paying in the right amount of money, and then you can go, from there. So, using that as an example, you're looking at, somebody that gave away, 12 or 13 or $1,500 in interest income, not to mention much more than that they probably could have earned on them by themselves. Or let's say you got credit card debt or something else out there that's now high interest rate. Well, you should think you could have taken that kind of $40,000 and paid off quite a bit of debt and saved you a lot of interest even on your credit cards. So, those are the kind of things that you've got to look at and really, really make a decision of, hey, how much money am I paying in? How much money am I getting back? And then modify that each year so that you're only paying in the right amount of money, especially when you're in business. So, if you're self-employed, running a consulting business, maybe you run an S corp, maybe you run a LLC or a multi-member partnership. You got to really look at how much you're paying in estimated taxes. Or, if you're an S corp and you're on payroll, how much money are you paying from there? And, run those estimates and be as close to the amount of money that you're going to owe come April 15th every single year. Don't just assume and pay in a whole bunch. Hey, this is what I love, questions. And if you got questions, please send them in. We need as much help today's show because it's all about you and the questions that you have. And we got our first question, which is from Greg. Hey, great. Do they tax that interest when they keep it? No, they're not accumulating interest. They're just earning the interest off the money or using that to pay down debt. So, if you file April 15th, and let's just say you're getting that $40,000 back, they give you your $40,000. They keep all the rest of the money, that the interest they would have earned or whatever over the year. There is no tax on it. You're not getting charged for it. They're not even acting as if you earned it. They earned it, or they paid down towards debt. Wait a minute, we never paid debt down around here in this country, do we? That's just a unbeknownst thing here to our government. It's more like get more debt, not pay down debt. But if they pay you the interest, yes, you got to report that on your tax return. And what you'll see is, in this client's case, he's going to get about $41,500 or so dollars back, in interest, maybe a little bit more than that. So he's going to get taxed on that extra, roughly $1,500 that he's going to get because he received it. If they didn't pay you any interest, you're not going to get a 1099 for the interest, and you don't have to pay tax on it. So, you didn't really get it. You didn't really earn it. So what happens now when you owe? Does anybody guess? They charge you penalties. If it's under $900 and you pay it, they're not going to charge you. So if you filed, October 15th and, you got filed timely and you owed $900 and you paid it, they're not going to charge you penalties on that. They're going to hit you with some interest or something, but they're not going to charge you penalties on it, which is really a nice thing. Now, any amount over that, then you get the penalties and interest. If you don't file and you miss the filing deadline, well, then it's penalties after penalties after penalties. IRS, Congress loves penalties almost as much as they love taxing you and I. I'm not sure which one they love more. I think they get more kicks out of taxing you and I than they do out of giving us penalties. But hey, if you miss the deadline, they're doing something to kick you in the rear end to make sure that you don't do it again. So you get a failure to file penalty. And then you get failure to pay penalty. And then they slap you with interest on the money that you should have paid, not just from April 15th, but then they go back and look at your estimated tax payments. And you didn't make your estimated tax payments, so therefore they hit you with interest on the estimated tax payments that you should have made, but you didn't make. See, that all adds up. You know, if it isn't bad enough that they hit you with the penalty, and then they hit you with penalties after penalties, and they continue to accumulate those penalties for a period of time for the failure to file, and they hit you each month while you haven't filed. And then, of course, they hit you with the penalties for failure to pay and add to it every month for a certain number of months out there. And then they continue to add the interest. So somebody asked me one day, how did $10,000 turn into a $20,000 tax debt? Penalties and interest over time. So, you know, you kind of got to think about this. You know, should I be making sure I make all my tax payments and estimated tax payments? Absolutely. And then, you know, should I pay this off sooner rather than later? Yes. If you got the wherewithal to pay it, yes, you should always step up and pay it. Hey, we got some other questions coming in. We're going to take a short break, and then we're going to start maybe addressing some of those questions and still talking about penalties, and then what can we do to solve the tax problem before it becomes too late. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, penalties. Everybody's got to, charge you penalties. If you're late paying a credit card, they charge you a penalty, and then they charge you interest. And then they even increase the interest rate. In this case, we're talking about taxes. And, we had a question from Jeff that came in, and kind of where you're getting there is how much is the penalty and how long do the IRS charge these penalties if you fail to file? Well, the failure to file penalty is charged at 5% of your unpaid tax for each month or part of a month your return is late. So the sooner you file, the better. Now, if you've paid all your taxes and you got a refund, there's no penalties. Now, this penalty only goes on for 5 months. So it caps at 25%. So if you owed $10,000, you're going to get a 5% penalty for 5 months, a 25% penalty basically. So another $2,500. So, you kind of got to look at this and say, hey, I've got to get this thing filed as soon as possible. Now, that goes also is if you don't file an extension and all of a sudden you owe money and you thought you were getting a refund, well, and you file by October, that's 6 months. They're going to charge you that penalty over that period of time because it was due April 15th and you didn't file for an extension. Now, remember, an extension is a time to file, but not a time to pay. You're still supposed to pay by April 15th. Now, what happens also if you fail to pay? Which, they're giving you the failure to file penalty based on how much money you owe. So again, if you didn't owe anything, you don't get the penalty. The failure to pay penalty goes right on top of that failure to file penalty. And it's typically 0.5% of your unpaid tax for each month or part of a month the tax remains unpaid. It continues until either the tax is paid or it hits the maximum cap of 25% of your unpaid taxes. Whew. See, that's where we now got to $15,000 off a $10,000 tax debt. Now, they also have a right to tax you and increase this penalty up to 1% based on different situations that you may be in. So, you kind of got to see exactly what the IRS is doing to you. And then they charge you interest. Now, they don't just charge you interest on that $10,000 tax. But to make matters worse, they charge you interest on the tax and the penalties that are outstanding until it's paid in full. There is no cap on the interest they're going to charge you. Even when you're on a payment plan, they continue to charge you interest on both the penalties and the taxes that are owed. Incredible little thing called penalties and interest and how it accumulates that debt at such a high level. Hey, we had a great question come in. Kevin, he asks, what if they don't accept your business return but don't tell you why? Do they set all these penalties? Well, Kevin, here's the thing. The IRS should be telling you and sending you a letter of exactly why your business return wasn't accepted. So we're going to make some assumptions here, or you can ask the next question and tell me what kind of company you have. Was it a partnership? Was it an S corp? Was it a single member LLC? Was it an Inc? How are you set up? But I'm going to take some guesses here. So you're Kevin and Company Inc. And you filed for your EIN. They sent you an EIN letter. The EIN letter came back and you didn't read it. And it said, hey, if you want to be an S corp, you got to file these forms. But right now you are set up as an 1120. Means you are a corporation. And it means you pay tax as a corporation, and the tax form that you have to file was laid out in the EIN letter, and it said you need to file an 1120 by March 15th of the next year. Well, you filed an 1120S, and it did not get accepted. Yes, the IRS is now going to charge you penalties until your corporate return is filed and taxes paid, because you're filing an 1120 means you were a C corp and the corporation pays tax, not you. It's not a pass-through entity. However, you could go back and file that 1120S with saying that this is your first year as an S corp, saying here's the 2553. Here is our letter saying we claimed this in net income from the K1 on our personal return. And the IRS will take in the return, not necessarily accept the return, but will process and then accept the S corp and then accept the S corp return. So there's little procedures you've got to go through. We could fix that for you. we can help you with that here at Taxation Solutions. If you give us a call at 888-930-1016, we'll talk to you about that. But, we can take care of doing the return for you and then work on getting that S-Corp status approved as well. So again, it's 888-930-1016. We also help resolve all IRS problems and making sure that we can resolve those issues and hopefully get rid of some penalties and then get you in the right plan, for yourself. Kevin came back and said, filed the S-Corp return the year before, not sure how things are set up. So Kevin, what I would say is go back and get that EIN letter, review it. We can go back and do a complete tax analysis for your corporation and yourself. We can come back in, refile that S-Corp return with all the attached documents and asking for grace and guidance from the IRS and get that S-Corp status put in place. Now, remember, with that S-Corp, hopefully you've been doing payroll for yourself or any other owners that are in the business, that are working in the business, because you are required to have a reasonable salary for yourself in the business as well. And one other thing I would warn you, if you don't remember what was in that EIN letter, it gives you a couple other things that you would need to follow. One of that is payroll taxes, which means it will tell you if you got to file a 943, 941, 940s. Those things are in that letter, especially if you put on the SS4 when you applied for that S-Corp, you applied for the employer identification number, that you're going to run payroll sometime in the next year. They automatically assume that you should be filing these forms. Even if it's zero, the IRS requires those to be filed as well. And it takes them a little while to start generating penalties and requests for those forms. But you would have to watch out for those as well. So, it becomes one of those difficult things that you need to make sure of when you're setting up your company. The very first thing you've done is, one, you've went to the Secretary of State's office in your state and you set up Kevin and Company Inc. or Kevin and Company LLC or Widgets Inc., Widgets LLC, and you fill out, after you get that designation and everything, then you turn around and apply for your employer identification number. So one's through the state, one's through the federal government. And once you have your company name, you file the SS4, you get your employer identification number, and then it becomes one of those most important things. Read that letter. Read what the IRS sends you. Read what the IRS told you if you did it online. Make sure that you're following through. We tell people all the time, sometimes help seems expensive, but it's more expensive sometimes to go it alone and make a mess of things and then have to go back and fix it. So reading becomes very important. When you do have somebody working with you to file your tax return, give them a copy of that letter. They should ask for that regardless when you first sign on with them. Hey, we got some more questions coming in. We're going to continue answering those questions. And then we're going to get back to talking about resolving that tax issue that you created by filing late. We'll do that right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, again, if you got questions, feel free to throw them in to us. We're going to answer those questions. You're helping the show. You guys are as much a part of the show as I am. What do you guys need to know? How can we help you? How can we resolve your tax problems? Or maybe how can we help you get the most out of your tax return and get the best refund and get the money back that you're deserving? Or maybe you just messed up and you filed late and you owe. So now we got to resolve the tax issue. So don't be afraid to give us a call. Get a free consultation. Let us see what we can do for you and how we can help you. Again, it's 888-930-1016. Again, 888-930-1016. Hey, we got a question in from Leslie. Yep, we've been talking about these EIN letters. She's asking, if you missed the letter and don't know what the corporation is set up as, how can you figure it out? One, hopefully, if you've kept the letter, you can go back and try to find it. I know what happens to a lot of IRS correspondence. Sometimes people just throw them out and they don't pay attention. Or even if you had a registered agent or somebody that filed for you, they maybe have gotten that letter and you'd be able to contact them and they should be able to say, yeah, I got a copy of it and can give it to you. If you've done it all yourself and you lost it or just have no idea where it is, the next best thing would be to call the IRS. Be ready to be able to give them that employer identification number, which I'm sure you have. Give them the employer address, make sure it is the correct address for the business, and then your information and what your ownership or work position is within the company. Now, the IRS will give you all the information you need of who, what, where, when, and why you need to file. So they would be able to answer the question for you saying, hey, your LLC was set up as a single member sole proprietorship, and therefore you file on Schedule C of your personal tax return. Or it said that you filed as a multi-member LLC and should be filing a partnership return, and here's your deadlines. Now, if you do call the IRS and ask those couple things of how should I be filing, make sure they look at everything. Are you responsible to file payroll tax returns? Maybe you're a trucking company. Are you required to file the heavy highway hauling tax return 2290, which is due in June, July of every year? IRS may have those filing requirements down for you as well. Now, once you figure all that out in talking with them, if you're not running payroll and you have no employees and they say you have payroll taxes to be filed, talk to the agent on the phone right there and tell them, I don't have employees. I am not running payroll. They can remove that payroll filing requirement for you and remove all the returns that have not been filed. Now, if they've done substitute for returns, you may have to go back and do amended returns or do actual returns and show that it was zeros. But just talk to the agent out there. They're going to give you that information. Now, if you don't have 3-4 hours to sit on the phone and wait for the IRS, well, right now it may be longer than that with only maybe 25% of their workforce working. We can do a complete tax analysis for you and your business and make sure that everything is correct, which isn't a bad thing. And it's relatively expensive right now. We have discounted tax analysis running for people currently across the board. It's taxationsolutions.net, or you can just give us a call at 888-930-1016. Again, 888-930-1016. Give us a call. We'll do that tax analysis for you. It's very deeply discounted, just to be able to help you, and just make sure you reference the show Tax Talk for You. Hey, while we're talking about Tax Talk for You, if you go to Tax Talk, the number 4, the letter U.com, you can follow us over there, follow us on Facebook, and never, ever miss an episode for Tax Talk for You.com on W4CY Radio, which we're here every Monday at 10 a.m. Eastern Time. But if you follow us, you'll never miss a show, which is the best thing for you. If you need information about taxes, and we have open forums, so therefore, if you have questions, we're going to answer those questions and help you out. We have a question here from, looks like Joey. Heard a rumor that the IRS will actually forgive taxes. Well, the answer to that is, yeah, they do. If you can get through 10 years. Yeah, 10 years without the IRS doing collections and levying your bank account, or doing a wage garnishment, or if you're in Social Security or pension, they can garnish those as well. But in general, the IRS has 10 years to collect on unpaid tax debt. After that, the debt is wiped clean from the books. The IRS just writes it off. Now, that's the 10-year statute of limitations. Now, 10 years isn't just 10 years. So 10 years can be extended. So depending on if you file for like a CDP hearing, collection due process hearing, you file for non-collectible status, while anything is pending, it stops that collection activity. It stops the statute of limitations from running. Now, that statute of 10 years is 10 years from the day that you file and the return is accepted. So yes, if you filed October 15th, 2024, and you owed $10,000, $20,000, $50,000, in October 15th of 2034, if you got away without paying any of that debt, plus penalties, plus interest, it will all go away. Unless you filed for offering compromise, CDP hearing, non-collectible status, then that time period is going to continue to hold the statute of limitations. So let's say you decided to file for an offering compromise on back tax debt, and it sits out there and is processed for, let's say, a year. Your statute of limitations gets extended by that year. It could be longer than that because it may take them 2 or 3 more months to kick it out of the offer status. And so then it's 14, 15 months that it's extended by. So, you got to not just look at the time period, but all the different extensions to that statute of limitations. But if you do nothing and the IRS, does whatever it's going to do over the 10 years and you manage to ignore them, they take a little bit of money because they levied your bank account, or you're not working and they finally levy against Social Security and you let that roll, eventually it's going to, debt's going to fall off unpaid unless the collections from Social Security is enough to pay it off. Then it's going to go away anyway because you paid it off. But if they happen to levy your bank accounts or your pension or your IRAs or your 401ks, then you're really out of luck. It's getting paid. Yes, I've seen quite a few people go through and work the system to get to the statute of limitations. And we've had a lot of people that come to us and we do tax analysis. And one of the things that we're looking at when we do our tax analysis is, one, of course, have they filed everything? Have they filed it correctly and timely? What penalties can we remove? And then when is the statute of limitations running out? And then we go from there and look at what is the best solution. So solutions to tax problems come in various different plans and ideas. The whole goal is to reduce the debt down as much as we can to be either affordable or to go away. So you just filed this year, but you have other years that you filed for in the past. Now, how do you get this debt to go away? Well, you sit and wait 10 years, statute of limitations run out. Okay, maybe you can make it to there, but maybe you can't. What are the true and real options? And where do you go from here? You've seen it accumulate. You see the debt get worse and worse. Now, what do you need to do to put a solution to your tax problem once and for all? Hey, it's anybody's guess, but I know. And right after we take this quick break, I'm going to give you some hints on what you can do, what we can do to solve your tax problem with the IRS. We'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, great way to end that last segment is, hey, what's going to be a solution to your problem? Hey, but before I get into that, I had a question from Jeremy. What triggers the IRS to audit you? Because I'm going through an audit and don't know why it was triggered. Well, without looking at your return, I couldn't tell you. But the number one reason is underreporting your income. So the IRS gets a lot of income forms, 1099s, W-2s, 1099S, house sales, brokerage transactions. Any of these things you have to report on your tax return. These are all income. So any income you're earning. If you don't report all your income, it's an easy trigger for the IRS. And sometimes it's a correspondence audit. Other times it's a full-fledged audit. It depends on what else is on your return. So if you've taken excess business deductions, you might get that full-fledged audit because you underreported your income, where it may have floated right underneath the radar. If you didn't do that, nobody knows. But the IRS right now concentrates mostly on those earning more than $200,000. But if you are a Schedule C, you're more apt to get audited as well, because in my opinion, the IRS thinks every business owner that reports on a Schedule C lies, cheats, and steals, and doesn't report all their cash income and everything else. So make sure that you're reporting all your income and take all legit deductions that you can find. And that becomes really, really important. So how do we solve your IRS problems? Well, we all hear on the radio and offers in compromise. That means you settled your debt for less than you owe. And it always makes it sound like everybody qualifies. Well, not everybody qualifies. If you can afford to pay, you can't qualify. Even if you can't afford in your eyes, if you can afford to pay in the IRS's eyes, because they have different standards than you do or I do, because they look at what is national standards. National standards gives you a certain amount of money you don't exceed for, housing and utilities, um, national standards for food and, whatnot over there, national standards for, what your car payment cannot exceed or car expenses cannot exceed, um, you know, school expenses for your kids, whether they're in private uh, school for uh, high school or elementary or middle school, does not get included there. Tuition, college tuition for your older kids, that does not get included in any way, shape, or form. Isn't that kind of amazing? The government has this a two-way street. You fill out a FAFSA for college and your income has to be counted for them, even though they're over 18. But yet when you have IRS problems, they can't count college tuition into your equation to settle your tax debt. Who wrote that? Yeah, Congress. It's just their interpretation of what's right, what's wrong. You can only have two cars. If you got cars for your other kids and they're owned outright, they're considered assets and you should sell them. So offering compromise isn't right for everybody. And that's something we've got to go sit down and go through a complete analysis. You can go through and do an installment agreement. Most installment agreements that the IRS is looking to do is a full pay. When you call them, that's what they're going to give you. Now, you might be able to qualify for a partial pay installment agreement, meaning you're going to pay less than what you owe over a period of time, but you're going to pay. Now, they're a little bit looser on the standards. You don't have to meet the national standards. Your other expenses and stuff are going to be included, at least during the time period that you're making these payments, or at least the time period that car payment and stuff is going to be around. So be able to go possibly partial pay installment agreement. And then maybe it's the non-collectible status. And that's where you don't pay anything as long as your income doesn't increase. Now, they may look at it in a couple of years. Hey, that's fine. If your income hasn't changed, you're going to stay in that non-collectible status. Now, which one's right? Well, first thing first. First thing we're going to do is sit down and look at what you owe, how much you owe, what the statute of limitations are. Maybe you have a year or two, or some that are showing up in about 4 to 6 months, that the statute's going to run out on. That being the case, we may not want a solution right away. Or we might just go after a partial pay installment agreement and let small payments go, and then that debt falls off. But we definitely don't want to do anything to extend the statute of limitations, and we don't necessarily want to file that offering compromise right away because it starts extending that statute of limitations. Now, the other fault with this offering compromise is it also has a 5-year period of full compliance. That means 5 years from when it's accepted. So if you stop the statute of limitations running today and by filing an offering compromise, and they process that in a year, you have from today till they accept it for another 5 years after that you've got to be 100% in compliance. And after that if you're sometime during that 5 years, you fail to stay in compliance, all the debt comes flowing back with the original statute of limitations starting from there. So wherever you were in your statutes, it picks up. So sometimes that is not the best course of action to take, especially if you know for a fact that there's no way you're going to stay 100% in compliance with the tax laws. So sometimes that partial pay installment agreement works better. Sometimes that non-collectible status, works better. Sometimes that full pay installment agreement is just the only option for you. But it's one of those things that we can sit down and look at doing. Now, we see this a lot for truckers. And we see this a lot for small business owners, across the board. They get into some small problems and it becomes larger problems. And what's going to be the solution? Well, if you call up one of those radio ads, TV ads, they're going to tell you you're going to qualify for an offer in compromise and get you to sign up. But the whole thing they said was before that, possibly, maybe, nothing's for certain. It depends on whether the IRS will accept it. All excuses. That's why sometimes it's best to go sit down and go through a complete tax analysis to where we can actually design the program to say, hey, you're going to qualify based on this or that. And then here's what the cost is to get you into this program. And whether you go with us or not from that standpoint, at least you are armed with the knowledge to be able to determine what route you need to go to put the best solution in place for you. Now, we've even told some people, hey, this is easy enough. You should be able to do this, this, and this yourself and get your tax problem resolved. We handle everybody case by case. There is no cookie cutter to this. There are certain people that we can look at and say today don't qualify for an offer in compromise, but when we get in it, they left out a few things that we really needed because they didn't think about them. And then we change one or two things that they're doing in their life, and all of a sudden they qualify to file an offer in compromise and settle $1 million tax debt for somebody for far less than what they're going to owe, because we were able to make changes to their life to qualify better in an offer in compromise and something they can afford. Danny asks, how long does tax analysis take? Well, there's 2 steps to it. The first step is going to be calling the IRS. We always put into our tax analysis a hold with the IRS. And so we get the hold, we get them to send us information about the debts that you owe. And then we wait for the IRS to process that power of attorney. So our system can pull everything else from the IRS in about 2 weeks. Where we get all the CSED dates and everything else that's there, which is the statute of limitation dates, and any other information that we could not get from a revenue agent on the phone. So about 2 to 3 weeks, and we've got all the stuff here to be able to tell you where we go from there. Tax analysis costs will vary, but right now we're doing 50% off. So call us at 888-930-1016. Jump in today and take advantage of that. Harriet asked, does this work for small corp as well? Well, Harriet, it depends on how you're reporting. If you're reporting on 1120, yes, we can do certain things for you there. If you're reporting as an S corp, then all the taxes actually flow to your personal. And yes, we take care of you personally, and then we can do a tax analysis for both you and the business out there as well. Now, payroll taxes, that's a whole nother story. We did a whole segment on payroll taxes. So if you go look at our podcast, you can go to Tax Talk for You and do a search over there, and you can find a podcast about payroll taxes and how to deal with those as well. Matter of fact, we might have another great discussion about payroll taxes here out there. And our last question here, will this information bring up any issues with the IRS? No, not at all. Hey, join us every Monday, 10 a.m. here Eastern Time on W4CY Radio at taxtalk4u.com. Again, it's tax talk, the number 4, letter U.com. Now, we'll see you every Monday right here. Again, 10 a.m. W4CY Radio. Don't miss it. Follow us on Facebook. Follow us on Instagram. Follow us on taxtalk4u.com. Have a God bless, glorious week, and we'll see you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.